Good afternoon, ladies and gentlemen. A very warm welcome to you back on Business Today Television. In our ongoing coverage of excellent quarterly performance, we are now joined by the management of India's best known consumer FMCG brand, Pidilite Industries. Mr. Sudhanshu Vats, Managing Director at Pidilite, joins us. Just a very quick look at numbers before we touch base with Mr. Vats. Sales rose 10% year on year for the quarter gone by to 3,554 crore rupees. Net profit was up 8% at 585 crore rupees. All that could do well is in top shape at Pidilite, and things are looking brighter and more wonderful from here. Mr. Vats, a very good afternoon to you and a very warm welcome to you, sir. How do you see the quarter gone by? What are the 2 or 3 highlights that prompted a 10% uptick on quarterly revenue, and how do you see profit from now on?
Thanks, Shailesh. Let me take all the 3 questions. A very good afternoon to you as well. I think we are very satisfied with the strong set of numbers that we've delivered, and you spoke about them. I think the 3 things which help us deliver quarter on quarter and deliver double-digit underlying volume growths. I think one is the strength of our portfolio, Shailesh. I think our portfolio is basically becoming richer, and it spans both depth and width in terms of home improvement as we keep getting there. So I think that's an important piece. The second is our demand generation, the way we work. Demand generation exercises which we keep doing, they are very good. Let me take a few examples for the quarter that has gone by. I think this has been a milestone quarter for our tile adhesive brand Roff, because the consumerization journey of this brand is now in complete swing. It's basically matured, it's happening in that sense. If you look at the quarter that's gone by, the impact properties, whether they were cricket or whether it was Pro Kabaddi League or it was some other impact properties, the brand is now beginning to get that recall. And like we had built the iconic Fevicol and thereafter Dr. Fix-It, I think Roff as a consumer brand, while it will be there for Bazaar as a segment, is already underway. This brand has also delivered excellent growths. I think so the growths in this quarter that has gone by have actually come from our growth brands, as we call them, Core, Growth and Pioneer, growth brands within the construction sector, and Roff has played a very important role in that. So I'm very happy to share that. I think it was an action-packed quarter. We did a lot of work on Roff, we did work on Dr. Fix-It. I think on Roff, we've also, in the month of September, actually towards the second half of September, introduced a premium version called NeoPro, so a premium brand. So while we are looking at penetration, because as you know, in tiles, 1 out of 4 consumers use any tile adhesive, and Roff is beginning to become a strong brand there. But we've also offered a premium offering for the full tile range under NeoPro. So that's a new activity which has happened. And I think a lot of marketing action was there in this quarter. Shailesh, I just want to sign off by saying the favorite Fevikwik actually did an AI avatar. And because everybody's talking about AI, and Fevikwik is such a loved brand and so extensively available, we wanted to make it more interactive for the Gen Z. And we basically did this platform where you could use an AI avatar of Fevikwik digitally and build and create objects. And the funnier you are, the better it will be. And we got 350 million plus views. But more importantly, Shailesh, we got 900,000 plus user generated content, UGC. 900,000 plus UGC, in my opinion, is remarkable. And I think that's something which is very interesting.
Okay. Now let's get into the nitty-gritty of the earnings sheet, Mr. Vats. Tell us what led to the improvement in margins. I ask you this question against the backdrop of intense competition, not only within your own space, but generally, raw material suppliers as well as, maybe the builders trying to squeeze the maximum out of their supply chain. Against this backdrop, how did OPM rise by about 67 basis points? What's the secret sauce here?
Yeah, so gross margin expansion of about 67%, Shailesh, as you pointed out rightly, about 70 bits. I think it was enabled by one improvement in the mix. I think the mix which I talked to you about premiumization. I give you one example. That is something we've just introduced, but we've been doing premiumization across our portfolio. So the mix improvement. And I think the second thing which has also enabled this, Shailesh, in this quarter, and we are confident of it in the next couple of quarters, is the raw material prices. So the raw material prices have been benign. VAM has been quite benign. I think that helps us. So raw material prices being benign is one, this thing, coupled with the product mix improvement which we've done, led to an improvement of about 70 bips, 67, as you rightly pointed out, on our gross margins.
Okay. The quarter gone by is traditionally amongst the weakest because of monsoons, because of a pause in the construction space, as also, people generally don't get into furniture because of moisture that sort of works negatively on wood. How does Q3 and Q4, or in totality second half of the financial year, look to you?
So, Shailesh, very good question. I think in terms of our business, if you look at a historical pattern, the seasonality tends to be 51% first half, 49% second half. So it is there, but it's not. But within quarters, quarter one tends to be very strong. Quarter three is a good quarter. Quarter two is slightly smaller, and quarter four tends to be our smallest quarter. I think that's the way our business pans out. But 51-49. I think with the momentum which is there on some of our brands, and with the good monsoon that we have seen, with the GST 2.0 and the liquidity measures and all the measures which were announced in the beginning of the year by Honorable Finance Minister and the RBI, I think we see continued momentum of double-digit underlying volume growth in the second half as well.
Okay. Let's dig this a little deeper, Mr. Watts. In the last 5-6 months or so, the tailwinds on the macro side have been phenomenal in the Indian economy. You have had GST rate cuts, you've had liquidity being injected by the Reserve Bank of India. Of course, interest rates have moved down dramatically, and spending power has been increased by the cut in income tax rates. All put together, how is this reflecting in sentiment from your buyer industries? What are you gauging from the sales and marketing teams? What are you gauging from the builders that you speak to? How are your institutional clients reacting to this change?
Very good question again, Shailesh. I think the first part, in terms of some of these measures, are beginning to reflect in buoyancy in urban demand for us. So if you look at our urban versus rural numbers, even in the quarter two, rural did better, but urban did quite well. You also see that, Shailesh, in our consumer and bazaar underlying volume growth. So if you peel our numbers a little bit, under our 10.3 company underlying volume growth, consumer and bazaar is 10.4. This is in first time in the last 6 quarters that we've delivered a double-digit underlying volume growth in consumer and bazaar. Urban has picked up. So that's the first clear example which is there. I think in terms of builders, in terms of institutions, I think there is greater confidence. It is in pockets though, but I'm saying there is a set of builders who are doing quite well. Their construction activity tends to keep growing. And we are addressing all of this through our newly formed, which is about a year now, Pidilite Professional Solutions team, which looks at this entire sector and then segments it into builders, both residential, commercial, large and small. Then we also look at hotels, health, kind of hospitals and so on and so forth. We look at large infrastructure sector. We look at plants and data warehouses and all that. So there is a dedicated team that looks at a lot of these things. I think from a consumer sentiment point of view, I think the impact of GST 2.0, we got to wait and watch. It is a positive step by the government of India, and I must compliment everyone involved, because making sure that the basic items of daily need have now gone to 5% is a good long-term and a very positive step. I think as the disposable incomes grow a little bit, Also, some of the home improvement items have come down in terms of absolute GST rates. Impact of that on demand will be seen as we go forward.
Okay. That's the positivity that we are also gauging from many other sectors, many other companies in the consumer space, Mr. Vats. Let's look at what probably did not work as much as you thought it would and may require further attention in H2. What are those subsidiaries where you thought that performance was a bit below par, and where are you now concentrating your energies at this point of time?
So our domestic and international subsidiaries have in general done well. You are absolutely right. I think when it comes to our international subsidiaries, there are a few pockets, Shailesh, where we need to keep working on. In international, what happens is Bangladesh did exceedingly well. Kenya did quite well. But I think we have to keep looking at individual. When you are present in multiple countries, there are a few countries which have either their geopolitical issues, sometimes there's a currency issue. So there are always one or two which we need to keep working on. So as we go forward, we will keep working on some of these international subsidiaries and international operations where we need to strengthen it more as we go forward.
Would you like to name a geography?
So I think it changes from quarter to quarter. I think in the quarter gone by, I think, we could have done better. Maybe Egypt is one where we could have done a little bit better. But I think, it's about, I would not get talked to about one geography. I think it's about making sure that we keep each one of them into the momentum. What is very heartening is Bangladesh continues to do very well for us. I think, despite all these things, Bangladesh is doing well. Kenya is doing well, which is our new promising area and subsidiary. Sri Lanka is doing quite well. So I think that's the piece which is there. But I think some of the others have to pick up. I think Thailand could have done a little bit better if I was to say. It's a small subsidiary, but that's another one which could have done a bit better.
Mr. Vats, maybe 25 years ago, our former Prime Minister, Mr. Vajpayee, said, you can choose friends but not neighbors. And Bangladesh is doing well. So that's a bit of a relief for everybody. They are consumers for many of our products, and let's hope that whatever is the rough edges of this relationship, they smoothen out pretty well. After all, Fevicol का जोड़ है, ये छूटने वाला नहीं है.
बिल्कुल बिल्कुल फेविकॉल का जोड़ है, and we are going to be there. We will keep improving these and keep building on them as we go forward.
Okay, now let's focus on capacity expansion. Let's focus on building new factories. At the moment, you have 19 factories up and running across the length and breadth of the country. What is the capacity utilization at this point of time, and what are new capacities that are coming online over the next say 6 months or so?
So, Shailesh, we don't share a capacity utilization number, but I think the number of factories, first of all, we have about 33 factories actually, Shailesh. Okay. I think our own factories, and then we have job worker units, then we have some joint venture factories. So, number of factories is much different. But what I can tell you is, as we look ahead for capacity expansion, there are three aspects we are going to focus on. The first focus is in our core portfolio, especially our Fevicol and white adhesive groups. We will look at more consolidated larger factories with automation. We've done one plant in Vizag. You will see some of that happening in the future as we go forward. So there are plans in place. So that's one area of capital expenditure. The second is, as you know, ROF is very rapidly growing, Shailesh. And the model for ROF, because it's a very voluminous cementitious product, is distributive supply chain. So we've already built 14 plants for ROF, but we will continue to build more. So that's the second area, because the closer you take plants to the market, the better you sort of service the market, and therefore the demand grows and the business grows. And lastly, I think as we look at new opportunities, new chemistries, newer areas, we will also look at plants where they need to be put up. So these are the three big core areas: bigger plants, more automation, getting better productivity, taking advantage of that. Distributive model here in the middle, and then lastly into newer technologies where we need to put up something.
Okay, Mr. Vats, there's hardly a price point, and there's hardly a city, rural area or village in the country where Pidilite is not present. that speaks volumes of the distributor network that you've set up over the last 5 decades or so. In terms of reach, in terms of geography, are there any new sectors that you have in mind by widening your product portfolio, or geographically do you wish to expand somewhere else?
Yeah. No, Shailesh, thank you first of all for the comment. I think, of course, our products are available across the length and breadth of the country. What I would, however, emphasize is that we continuously keep evaluating how effective is our distribution today as we go forward. How are we doing in individual, from a depth point of view in individual towns? How are we doing in range? I think that's the work which we keep doing. Also, one thing which we keep doing through our Emerging India division is how many places more should we go directly? So our direct reach or direct presence should be in how many parts, how many more towns and villages of India. So that is a number which will keep growing as we go forward.
Mr. Vats, time is of the essence, and yours is more precious than mine. Thank you so much for this wonderful conversation, and we look forward to meeting you again and again over the coming quarters. Here's wishing you all the best and hoping that Fevicol ka jod hamesha mazboot rahega.
Thank you, Shailesh. Thank you, and always a pleasure talking to you, and look forward to our future interactions. Thank you very
Wonderful.
much.
That, ladies and gentlemen, was Managing Director Sudhanshu Vats at Pidilite Industries. Profit in the quarter gone by rose about 6% to 585 crores. Revenue surged 10% to about 35-32 crores rupees. I hope you enjoyed the conversation as much as I did, and here's wishing you more wonderful times ahead as far as markets are concerned. Continue watching Business Today Television. Thank you.